Okay, well, that's, the big deal which was announced. Now, Bajaj Electricals posted a weak set of first quarter numbers. Lighting and switchgear segment witnessed weakness due to subdued demand. Consumer products division also saw very low single-digit growth. To discuss this and more, we are now joined by Anuj, Poddar, Managing Director and CEO at Bajaj Electricals. Anuj, great to have you with us here on the program. Thanks very much. Prashant, this side. So consumer products business revenue grew 2%. In the lighting segment, the revenues are actually down 13%. I want to start with the consumer products business, and there, specifically, what happened to the fans segment. That is the segment which has seen so much competition from newer players. You've actually seen volume degrowth, right? I mean, almost 10% or so. Could you tell us what you saw there and what are we seeing?
That's right. Good morning, Prashant. Thank you for having me. Consumer products business has been relatively flat on top line, 2% growth as you called out, led by the fans degrowth, but the rest of the appliances have actually grown by about 10%. For the fans, it's, I think, really a function of a weak summer. We've all seen unseasonal rains, particularly through most of northern India and parts of western India. That has affected demand for the cooling products. And only other factor playing out in the fan segment is that since 1st January, as you know, the new star rating has kicked in. So I would say, in the case of fans, don't look at one quarter, but look at the last 2 quarters, and I think the next 1 quarter. So over a 9-month period or whatever, I think there's a lot of churn happening in the fans category. But if you look at that on an overall basis, we've actually been growing market share there.
Okay. Anuj, three things. One, could you give us the fans volume degrowth number? And you said 10% for rest of the segment. Is that volume or sales? If you could give us the volume number for the rest of the category in consumer, ex-fans. And 3, there will be a pickup. But is competitive intensity very high, or you think we are perhaps at a bit of a trough now in the fan segment specifically? Go on.
So let me, nuance that a little bit. Firstly, on the volumes, while we don't put out official volumes, if our growth in appliances has been about 10%, you can safely say volume growth is probably 6 to 8% over there, across different categories. In the fans case, since you have a value degrowth of 8%, probably the volume degrowth is higher at about 10 to 11%. It's a mix of competitive intensity, but more, I think, one, I called out the weak summer, but also there's an overall weak, muted, discretionary consumption demand in the economy. You're seeing that across sectors. I think both of these factors combined are leading to pricing actions or discounts, if I may call it that are not necessarily healthy. So in this kind of an environment, players are discounting. So some of this you're seeing is really a function of the weak demand leading to pricing actions and therefore also soft overall values here.
But even if you look at your other segment, right, which is your lightings business, especially the consumer segment, that has seen a steep fall this time around. Is this double-digit fall something that can continue? And is it particularly to do with something that you guys are not sort of keeping up to speed with the market? Because there is definitely a lot of competitive intensity at the moment. So what are you doing to combat that in the lighting business?
So in the lighting business, it's the consumer lighting and the professional lighting. And the professional lighting, to leave aside the ESL business, that's flat, so there's no degrowth. The consumer lighting has seen a double-digit degrowth. You see the trends in consumer lighting since last 3 quarters. That is an industry trend. That said, in fact, I'm more confident of that coming back faster. I expect Q2 to have growth in the consumer and professional lighting side. I think the larger consumer products is more a function of the economy picking up or the discretionary consumption demand picking up. I think that should happen by the festive season.
Okay, all right. Hi, Anuj. Good morning. Could you tell us in terms of your market share in the fans business because of the new star as well as some kind of demand slowdown as well? That's what hurt the growth. I mean, that's the degrowth out there. So what's your market share? Have you lost some market share? And also for the business on the whole, by which quarter do you get to double digits? That's something that the street has been hoping for. So when does that happen?
So Nigel, on the market share on fans, overall, I would say from a Y-on-Y perspective, not just a quarterly perspective, we moved up from over the last 18 months from somewhere 8+% share to a 10+% share. And from a rank from being a lower ranked player to a number 4 ranked player. So we are gaining market share in the fans category. I'll put in one more data point. Typically, we were known as a sub-economy fans player. About a couple of years ago, about 85% of our revenue contribution in fans was sub-economy fans. In the March quarter, that was about 67%. In the current June quarter, the sub-economy contribution is down to 58%. which means the flip side, the premium and the economy is actually gaining share for us, and therefore our portfolio mix is getting better. So, and that's the reason I'm confident that overall market shares for us are increasing in fans and our mix is getting better. So as the demand of consumption industry picks up and you get back to a good summer next year, we are well poised in the fans business. Coming back to overall margins. Sorry, go on.
Yes, please go ahead.
Yeah. Coming to your question on the overall margins, I think it's really a function of primarily operating leverage or deleverage. The underlying metrics are fine for us. We've done the math very well. If you see the operating leverage kick in or the demand come back, you will see the margins actually come back very sharply. Okay. In fact, let me give you another data point. At a contribution level, our margins in June quarter about 2.4% up over last year. But that's
when
lost
do we get to double digits?
Because of
Anuj, when do we get to double digits? Which quarter?
Nigel, you'll keep asking me that. It's not going to happen this year. We don't give a projection, but it's definitely not this year. But that's fine. The trajectory is important for us.
Okay. You hinted at pricing pressure. I'll tell you, and you said premium share is going up. That is good news. But I remember a year and a half out back, I bought a fan for my house. I paid some 6,000 rupees, one of those remote fans, and I think it was by a company called Attenberg, which has done very well in that segment, which is posing competitive pressures. Last month I bought the same fan, and I think I ended up paying some 3,500, and it was not in one of those sales. And this is the premium segment that you're talking about, Anuj, right?
That's right. Yeah.
Is there huge, tremendous pressure even in the premium category?
Yeah, so I think the pressures across, all consumption products because of the soft demand environment, and then each company is having their own pricing strategies, and at an SKU level sometimes varies. I would say, what you're describing is almost like a 40 to 50% discounting. To be honest, that's probably an aberration. I don't know the specific model comparison that you're giving. I wouldn't say it's that sharp, but I would put it the other way around. With the new star rating regime, there's almost a 10 to 12% cost side increase that is not passed on. I think you have a 4 to 5% cost impact that we are taking in as players here. The last point I would want to mention, the fan you're talking about clearly is probably a BLDC fan, and that's probably a 5-star rated fan as we call it now. What you will see happen over the next couple of years is that today the market is kind of polarized between a 1-star and a 5-star rated fan, but you'll see the emergence of a 3 and 4-star rated fans over the next 2 years. That's pretty normal across ACs, refrigerators, etc. And that will give you a greater, sweet spot for consumers to actually go in for.
Okay, all right. We'll let you go on that note. Thanks a lot for joining in. That's Bajaj Electricals. But let's get back to the market now. It looks like the opening is going to